Joining us right now is Mohamed El-Erian, Chief Economic Advisor at Allianz, also a Wharton professor. Mohamed, we're all trying to make sense of these markets last week. For a moment, seemed like a bloodbath. Then things turned around. We got Bitcoin. We're all trying to make sense of what's exactly happening here. What is happening in your mind?
So last week was mainly technical, Andrew. It was a deleveraging that started in the most speculative parts of the market, silver, Bitcoin, etc., and contaminated others, but we got the well-established buy on the dip conditioning coming in. So last week was technical. The week before was policy news. This week is going to be all about data. So, it's a fascinating time to be observing and participating in these markets.
Can you explain the Bitcoin situation?
Only as so far as people really bought into adoption. That attracted a ton of speculators. And then you got a shakeout. You see it also in silver. You see it to a lesser extent in gold. And I think this is what we've seen so far. I think the fundamental theme for Bitcoin is continued slow institutional adoption. And it's going to be volatile until that base of resident investors, not tourist investors, resident investors becomes big enough to absorb. It is in gold. It's not in silver. It's not in Bitcoin. So
we just had Anthony Pompliano on. We were looking at Bitcoin, obviously under 70,000 again. Are you? We've talked about Bitcoin over the years. Are you of the view this thing continues to fall, or do you think this is a bottom here?
I think this continues to be volatile. I have not been a big investor in Bitcoin because I don't quite understand things that go beyond the technicals. But I see it as volatile. This year, as opposed to last year, I think the big three themes that investors have to embrace is volatility, dispersion, and fragmentation. That is what's going to determine their success this year. Whereas last year, it was all about embracing secular themes. So we're seeing a change in what is driving markets.
And then when you think about the sort of technical nature of last week, I don't know how technical it is, because I think to myself, there seemed to be a psychological, for at least a moment, and this is the question, is just how permanent it is or not, and maybe it's not at all given what happened on Friday, but there was a view, all of a sudden, two things going on. One was, oh my goodness, these companies are now spending too much. Before, we used to give people credit. The stock would go up if you spent a lot of money. Now, maybe not. The second piece was, oh, my goodness, some of these software companies, smaller software companies, are going to run into a lot of trouble because people are going to effectively vibe code the same program. What do you think of those two issues?
So I think the AI tech theme is evolving. Last year, we embraced anything AI. We fell in love with those working on foundational models. Literally anything that had an AI label on it attracted money. We're now in a more mature phase of this process, and we're asking the right question. We're starting to differentiate between companies. A Google versus an OpenAI is an example of that. Secondly, we're starting to realize that there's a certain dynamic driven by FOMO, whereby there will be overinvestment. And the bond market has widened spreads a little bit on the hyperscalers, and that's the right thing to do. So what I see is that the themes are evolving from something that was new, that we embraced very holistically, to something more healthy now, where we are starting to ask questions and we're starting to differentiate between players.
Mohamed, we're going to have Kevin Hassett on in just a little bit. What do you think of the employment picture in America right now?
So my biggest worry on the macro is this decoupling, Andrew, of strong GDP from the labor market. I have a piece coming out in the FT later this week that says this is really consequential in terms of economic, social, and political implication. It's not the first time we see it. We saw it in the 1990s. We saw it in 2000. We saw it coming out of the global financial crisis. But this is the first time we see it when the economy has been persistently strong. So I would ask him, how worried are we that job growth is decoupling from GDP growth? And if we are worried, what can we do about it?
And how worried are you? I mean, that is the fundamental question. How much do we think this is a function of AI?
So I think it's a function of three things. Certainly, AI has an impact. I think also we are unraveling some post-pandemic behavior, and I think there's general policy uncertainty. So AI is a contributor, but it's not the only thing.
Right.
How worried am I? I think this time around, this is going to be a more persistent and more consequential phenomenon, but it is one that we can mitigate. But we need to talk about it, analyze it.
Right.
But the last thing we want is for GDP growth to decouple from jobs.
Okay, so Mohamed, here's the real question, and give credit where credit's due to Kevin Warsh. You know, he's been talking for a long time about the idea that AI could create this productivity boom, and that would allow, frankly, the Federal Reserve to lower interest rates without actually creating more inflation. But then you talk about the dual mandate, and you start to think about what do you do about employment on the other side. If you're Kevin Warsh, what do you do?
So I think Kevin is correct. I think that we are entering a period where we will see productivity enhancements if we get diffusion right, if we get adoption right. I always stress that. I think that will increase the safe speed limit, meaning the non-inflationary speed limit for the economy. And I think rates can come down from here. I think if you focus on Kevin Warsh, the tendency has been to focus on rates and the balance sheet. There's the third element, which is the reforms to the Fed. And I think that is really important, because if the Fed is to return to being a constructive policymaker, it needs to reform quite a few things in how it does it. And Kevin Warsh, judging from his April speech in Washington last year, has some pretty good ideas about that.